Hey traders, Raghee here, and for this free video we're going to cover rates, home builders, and construction. This is a major theme that's dominated our trading and my portfolio since about Q3, Q4 of 2018, and it really continues to be a trade and a theme and a trend that we can continue to rely on because the long bond short yield trade continues to be the gift that just keeps on giving. So let's talk about how this all connects. Now let's go back just a little bit to the previous FOMC decision. So we're going back to June, and if you remember, and you probably saw the move, we saw home builders get hit pretty hard as the market really wasn't sure just how accommodative or dovish the FOMC was going to be in June. Ultimately, they set up the high expectations that we're seeing for the July 3-1 decision on rates, which is already discounted and highly anticipated to be a 25 basis point or quarter point cut. Now you'll notice as the market moves closer and closer to this end of July decision, support in bonds and also support in ETFs like ITB and XHB continue to deliver. Now, why is this? So again, think about any time traders are not certain about the direction of rates, in this case continuing to go down, you're going to see home construction ETFs like the ITB get hit. Even home builder ETFs like the XHB again get hit. Now that means that there are a number of particular stocks, which we'll cover in just a minute, that are going to be affected. If I am long bonds, I want to stay long ITB and XHB on pullbacks. The next thing is, why would I play these? There's really two narratives here. One is looking at high yield plays, which we'll save for another conversation, but the current one is, how do bonds affect mortgage rates? So if you were to look at the 10-year Treasury and the 30-year Treasury, think about how the 15-year mortgage and the 30-year mortgage are going to mimic basically their trajectory. I think most traders and investors and home builders know this. So mortgages have higher risk than bonds. I mean, I think most of us know this as well. So when we look at where yield might be sought, that'll be a conversation that includes REITs and real estate, again in another conversation. That's one place the market gets pulled. But here's the other thing. The US Treasury note, the interest rate on a US Treasury note means as it drops, it means that banks have to drop rates on their new mortgages. And in the opposite direction, as the rate for U.S. Treasuries rises, banks are then given the green light to raise interest rates on new mortgages. So that's where we see that very sympathetic movement. Let me show you here. I've got an image that I can show you to really highlight this. This is the 10 and the 30-year mortgage. Look at the 10-year yield in that cyan color. Look at the 30-year fixed rate. Look how they track together. Here's another really interesting image. This is interest rates. Interest rates, as you can see here, the Fed. This is the average fixed rate mortgage in red, and the Fed funds rate in blue. Now, it doesn't track as well as the previous chart I showed you, but you can see where that federal funds rate that is expected to be dropped by 25 basis points affects that 30-year. Now, if we know mortgages are about to drop, what are the stocks and the broader ETFs that are going to benefit from this? Let me open up the ITB here. The ITB, right here, take a look at the heavily weighted names. DHI, DH Horton, Lennar, NVR, Pulte Homes, Home Depot. Look at the names here that continue to benefit from this anticipation. So you can take the idea of the long bond short yield play. Of course, play long bonds. We've been long bonds since Q3 actually of last year. So you can play long bonds, but when you think about the impact treasuries have on mortgage rates, and then you think about which stocks are going to benefit from the mortgage rate dropping as the US treasuries drop too, these stocks become more appealing. In fact, The bond proxies like XLU and REITs, as well as names that are sensitive to the drop in REITs like your home builders and your construction, continue to outperform. Now, as long as you understand the timing that the bonds give us to these broader ETFs and their individual stocks, you can set up trades not only in your portfolio, longer term, say position trades or even investments, but you can also set up shorter term trades. Case in point, something like Home Depot. Home Depot continues to bounce off the 13 exponential moving average as we continue to climb. Now, my futures traders, take note, this is not something separate from what we typically do with bonds or even our broader averages like the Dow. We've bounced off the 13 EMA twice. What is a heavily weighted stock in the DIA or the YM? You got it. Number 4 is Home Depot. So when you start to see all these connective threads, you can find the opportunities in this long bond short yield play. In an upcoming conversation, we'll talk about REITs like VNQ, XLRE, and this sort of seeking yield and where this long bond short yield trade plays out there. And again, another powerful thing to add to your portfolio and also to your trading watch list. Okay, so again, where do long bonds short yield take us? All these places. Understand these connective threads. They will continue to deliver for you throughout your trading career. I'll see you in the next update.